Thank you very much for coming on. How are you doing today?
Yeah,
Very
great.
well,
Thank you,
thanks,
Roland. Thanks for having us.
Yeah, no problem. Thank you. So look, I mean, I've been following you on social media for a little while, but for people that don't know you, do you want to give a sort of quick bit of context for kind of who you guys are and what you do?
Yeah, absolutely. So I'm Mary and this is Andrew. We're both architects by profession and property investors by choice. And we live and invest up in Yorkshire and particularly in Leeds itself. Our focus is on HMOs, though in the past we have service accommodation units as well, but our main focus and strategy is around HMOs.
Awesome. Okay, so on the HMO front, I think first thing I wanted to ask is, when is Elite Coldwell going to be finished? Because everyone,
No.
like, you're so active on social media and everyone's just desperate to see the finished product. And I think the expectation is seriously high, by the way.
Oh no.
Oh no, don't say that. How long's a piece of string, I suppose? No, the beds are being delivered as we are speaking right now. We had a phone call off them about half an hour ago to get into the house. So
Okay.
we're getting close. The kitchen lounge area is a little bit behind. So whilst the beds are going in, they'll think we're there at the end. But yeah, I'm hoping end of next week we should be pretty much there. It'll just be snagging and dressing and things like that. So we are definitely getting close. We can smell the end.
Cool. It's always it is always an exciting time. I'm sure it's been frustrating. You must have had delays in the last few weeks, but it's exciting when you get towards the end and you can kind of get your nice photos in the can and stuff.
Yeah, it was getting the carpets on Monday. All of a sudden, we were dealing with a house. We weren't dealing with a construction site anymore. You know, we just was that tipped us over into that new. The end is coming.
Yeah,
exactly.
I think it's when you are working on projects, you do expect certain types of or certain percentage of delays, which kind of we had a certain percentage of delays on the project, but then we've had to put up with 2 months of COVID as well.
So I was going to ask you, like, you know, the COVID thing is obvious and everyone's struggling with that, but I mean, what's been the other main challenge on that project? Because people would say, well, you know, these guys are both architects, it must be a piece of piss for them, but obviously, you know, something always happens, right?
Absolutely, yeah.
We're both architects. Well, I suppose we're both still human, and the builder turned out to be a bit of a cowboy, really. So that's what we've been having problems with. He was just basically, I think he bit off a bit too much more than he could chew, and he has. He obviously has skills, you know, he's a builder, he did have skills in certain areas, but like some of the things he was trying to do, like he's tried to do the plumbing himself and he just clearly wasn't qualified to do that, and that's caused lots of other people he was getting in to do it clearly weren't qualified or competent to do it, so that's caused loads of delays and loads of issues.
Did you carry on with him, or did you get rid and get someone else, or?
We have got rid of him.
Yeah. We went when we were sort of quite far down the line. We had quite a lot of delays due to, I suppose, competency, etc. So we we can't go to it too much. We'll definitely talk about it once it's come out of the wash on the other side, but it had to be terminated. The project got terminated with him in a sense, and that's when kind of COVID hit and everything like that. And anyway, so we took it on and project managed it and got different people in to carry out the works, and that obviously really slowed it down due to COVID, because the works that we carried out, it had to be a builder at a time during COVID. So you know, one would get a plumber in for a couple of days and then they would go away in anticipation to come back after the joiner has been in and carried out certain types of works like doing the kitchen and things like that. So it's been very interesting. It's been a really good learning curve for us in terms of kind of what contracts to put into place before you start any works with any builder, what kind of things to look for when they put their quote forward, and how detailed their quote needs to be.
Yeah.
I think there were certain things that we kind of knew, but because we wanted to push the project forward, we took a couple of things for granted. We were like, look, this is fine, let's just go ahead with it, and everything like that. And although, you know, Gantt charts were produced and things like that, what we hadn't anticipated was that the builder didn't really use other people like we thought he would, and the project just dragged on, and the Gantt chart wasn't realistic for the number of people he actually had on site compared to how many we thought he was going to have on site.
Right. Okay. Okay.
So it's been a really, really good, really interesting learning curve that we're already implementing on our next project, aren't we?
Yeah, I was going to say.
I mean, a lot of this came from the fact that the original builder we were getting dropped out at the 11th hour. So then, like Mary said, we were there, we were ready to go, and all of a sudden we lost the builder. So then we maybe rushed the due diligence process at the beginning to get started on site.
Yeah. It's one of the questions I get asked the most, and I don't really have a particularly good answer to it. Is like, how do you find a good builder? And it is really difficult. Like, have you changed your how have you changed your approach? I suppose basically you had a good approach and you found a good one, but then you were in a rush. Is what happened basically.
Yeah, exactly. I think with the next one, we're going to continue project managing it ourselves and maybe go with individual tradesmen, because we have found 2 or 3 really good tradesmen through this process of trying to finish a League Coldwell.
Yeah.
So we're going to look at that route for the next one, and then I don't know, maybe we continue on that route anyway, and even if we're not project managing it, we find a project manager to do it as opposed to finding a main builder.
Contractor, yeah. And when's the next one starting?
It's on site.
Yeah, we shut that one down to start with when COVID happened, just because we were just stripping it out, and there was, whereas League Coldwell, there was we were getting close to an end. There was a point of, we carry this on, we get it finished, whereas the other one was like right at the beginning, so it was a bit pointless chucking money into it. Whereas now we've started back up again, so we're stripping it out and getting all the trades round and to look at it and things like that. So hopefully be up and running properly in the next few weeks.
Yeah.
Cool. Good luck with that one. Yeah, pretty similar. I mean, we've got one which is it's now halfway through. So I suppose it was kind of early-ish when the COVID stuff started, but the builders were quite happy to, put fewer guys on site. It's 3 stories, so they can have sort of one person on each story, and they've sort of carried on working on that basis. So it seems to be weirdly like pretty much on schedule, even though there's fewer guys working there. So I think it's they're not getting each other. You know how if you put loads of people on site, they all get each other's way anyway, don't they? And particularly the higher skilled trades, the plumbers and the electricians, they're always complaining about, there's too many people here, I can't do this. So that seems to have actually weirdly been like beneficial. So it seems to kind of sort of even itself out. So something I wanted to sort of talk to you guys about, because I didn't know this, Andrew, when we've spoken before, but we've both been quite heavily influenced by a same book, which is the 4-Hour Workweek.
Yeah.
So for people, before we sort of dive into that, for people that sort of don't, and is this true for you, Mary, as well? Are you a fellow fan of this one?
Yeah, I am, certainly. Okay. Not as much as you are. You can't stop talking about it.
I didn't want to exclude you from this. So look, for people that sort of don't know the book, and I think even the author admits it's got a pretty sort of scammy sounding title. What is your sort of like the key sort of message of the book, and what's the sort of the main thing that you've sort of taken away from that?
For me, a lot of it was about the whole being effective, not efficient. It's not about how much you can get done in a certain time. It's about prioritizing the key tasks that need to be done. And there's the book, the 80-20 principle, but Tim Ferriss talks about it a lot in the 4-Hour Workweek as well, which is about how kind of 20% of what you do generates 80% of the results, and vice versa. 80% of what you do is 20% of the results. So kind of just cutting through that fat and understanding what needs to be done, when it needs to be done, and what's the kind of high income generating tasks. I think they were the big things that I took out of it.
Yeah, working smart, not hard.
Yeah.
Our university lecturer used to tell us that all the time. And I really took it in. And I thought, working smart, not hard is just the very right thing to do. I think especially in investment.
Yeah, because I was thinking about it this morning before we got on this, and it's actually quite a sort of, it's not actually a hugely long, I mean, it's a longish book, but it's not massive, but there's quite a lot in there in terms of, there's the whole efficiency and effectiveness efficiency part of it that you just kind of alluded to. There's the whole sort of like lifestyle design piece of it. Yeah. And then there's the whole sort of, how do you generate income, an income generating idea, which he calls a muse. I mean, to me, that bit of it, the income generating bit of it, was probably like the weakest bit. I don't know if you agree with that. I mean, or maybe it's just very dated, but, basically, if people haven't read it, at least in the version that I read, it was basically kind of like find something in China and sell it online, which clearly is not what you're doing. So did you similarly kind of feel that bit of it was weak, or was there a reason why you were like, no, it's going to be property?
No, we well and truly explored those avenues. We were looking at all sorts of stuff, selling things online, network marketing, affiliate marketing, email marketing, all those kind of things. And
selling tea.
Yeah, selling tea. And then it was just, and then later, whilst this was going on, we were trying to set these up, Red Rich Dad, Poor Dad, and how the algorithms must work, and got an advert on the bottom of the Safari Explorer saying, Rich Dad, Poor Dad, property, investing course or whatever, free seminar or something. And that was when the penny dropped. I think we went to that seminar, and that's, just being architects, it just made complete sense to do property.
Yeah.
Fair enough. And so is that where it all started, in that sort of three-day course, basically?
Yeah, we did this 2-hour seminar thing, which with the hard sales pitch that we ran to the back of the room and signed up for the three-day course. But I don't regret that for 1 minute. I thought that, to be fair, that course was excellent that we ended up doing. But yeah, that's where it all started from.
And what have you? And since then, what's your sort of like approach to education or mentoring or anything like that? Is that something that you sort of do and encourage others to do, or? Because it's become a bit of a minefield topic, and
doesn't it? It's a very grey area, and I think lots of things have come out in the press and everything else with it as well, hasn't it? As of late, I think we're not averse to courses, etc. Especially, I think when you start off with that 3-day course that we took as novices, as people who didn't know anything about property, we thought that was a really, really good. So, short bursts, specialized courses, I think, are quite nice. We also did service accommodation course because we didn't know anything about service accommodation, and it's a business in itself. So we thought that course was really good. We don't like the hard sale pitches, and especially the emotional one. I think my ethics don't work well with it. I don't think, I think if you're going to sell something, you need to sell something. But, in saying that, we do think there's a lot of courses out there that are costing people a lot of money, and they're not getting enough from it, or they're not, then they're kind of not putting enough legwork, thinking, okay, I've put 20k into this, I expect something out of this. I think for us, it's worked out really well that we've done the specific specialized 2-day courses, etc. And then we've got ourselves a mentor to really hold our hand, a mentor that does exactly what we kind of want to do. We want to be where they are in 2 years' time. So they're kind of closer. They've achieved what we want to achieve in that short amount of period. They're only 2 years ahead of us, so they have lots of information really fresh for
Yeah.
us to give us and help us kind of in that sense, rather than it kind of being a course with like loads of people and, you know, we don't get enough interaction time and enough support time, etc.
Yeah, I think that's kind of what I've concluded in the end of this sort of whole debate, is that actually mentoring is some sort of classroom based type thing foundationally right at the beginning can be useful just to kind of get you a little bit up the learning curve. But the reality is that you kind of have to learn on the job. So you need someone who's going to be there to pick up the phone and answer your questions as you're progressing through. Because if you learn it all in like a massive boot camp up front, A, you'll have forgotten it by the time you're actually doing it. B, the specific thing that you're now facing won't have been covered in the course. So yeah, I think that mentoring is actually the way to go. Having said that, it's not that easy necessarily to find a mentor. That's what people often say, like, how do I find a mentor? Do you have any sort of thoughts on that?
I don't know. We've got our unofficial mentors who are just friends and peers who are further down the line and are taking us under their wing. So I think don't necessarily think it has to be somebody that you need to pay for the time. Just having a network of people around you, and then obviously we work with May Green and they're well advertised as being doing their kind of mentoring program, so they are out there. It's just making sure you do your due diligence on them, and I think it's sorry, not on May Green, on mentors in general. You do your diligence on mentors in general, and understand that. Make sure that they're offering what you need or what you want, not just you're effectively signing up to some other program or something like that.
Yeah, I agree. Yeah, because sometimes people come forward very, very well, where they're presenting or they come forward very well online, etc. But if they're not doing exactly what you're after, but they're just saying, oh yeah, okay, you want to do HMOs, but I do buy-to-lets, well, I can assist you, or I can tell you, or I did HMOs 10 years ago. I don't think that's good enough. I think you need to really align your kind of your beliefs and understanding and where you're going. That needs to be aligned, and I think if it's not aligned, it's not gonna pan out that well. And that's just my understanding.
Yeah. And to be fair, I mean, with that example, with the people that you work with, I mean, I was aware that they do some mentoring, but at the same time, they're not shouting from the rooftops, like, we're mentors. They haven't got like a sales funnel and all that kind of stuff, as far as I'm aware. So, I think, there are, going back to your point about the hard sell, right? Like, if there are people who are kind of like, you're being targeted by Facebook ads and you can feel that you're in a funnel, then that's probably the ones to steer clear of.
Absolutely.
So I wanted to ask, you did this series, Instagram live series, which was very, very popular, about mindset and motivation. Is that the right?
Yeah.
So, I mean, you spoke to lots of very successful people on that about this theme, this topic. So was there any sort of one thing that sort of came out of that for you? What did you learn from it? And what was the thing that you could kind of see, if there wasn't a thing, from these people that you were speaking to that kind of like pulled the whole thing together? Any sort of commonalities in terms of personality traits or approaches that they have that you think that sort of seems to be a sort of essential ingredient?
I was surprised at how many of the guests did meditation. I was actually maybe like 8 out of 10 or something of them did meditation, which I was a bit taken back by, because I know everyone talks about the positivities of meditation, but I wasn't expecting so many people to kind of be doing it or doing it regularly. I think that there was a lot of the people who were on were all very clear in that they were doing things by the way that they wanted to do it. What I mean by that, in terms of, a lot of them had grasped when they work best, what times of day they work best, how they should schedule their days, etc. And they weren't kind of driven by a 9 to 5 kind of mentality or anything like that. Right. I think that's really important, understanding whether or not you work best in the evenings, or whether you are a 5 a.m. club type person, because that's not for everybody. I don't think you need to be up at 5 a.m. to be a successful property investor. I think that was quite clear that you don't from the people who were on.
That's good to know.
I think the biggest thing we took away was Jess's tip of your 3 achievements. Write down your 3 achievements for the day before you go to bed. Because I think it's very easy to think you've not done anything or you didn't accomplish half your to-do list.
Yeah.
And it's actually acknowledging 3 things that you did actually do towards your business in the day and that you have moved your business forward. And
that's a really interesting point, because that's also something which, although it sounds really sort of silly, like the user interface of whatever to-do list or task manager you use has a big impact on that. So I started off using Trello a bit, and I didn't, loads of people were raving about it, but I never really kind of got on with it particularly. And so recently I started using Asana. And when I was looking at kind of some videos on comparing the two, one of the things that kept coming up was that when you complete a task on Trello, it sort of disappears. And whereas when you complete a task on Asana, it sort of it grays out, but it's still there. So at the end of your day, you can see these are the things that I did. Whereas if you've got a to-do list app or system that you tick it and it disappears, you're not reminded that you've actually done stuff today. Like all you're left with is the rest of your to-do list that you didn't get through.
I know.
It's very different, it's a very different feeling at the end of the day, isn't it?
Yeah, we use Asana as well, actually, don't we? And we kind of categorize things. So we've kind of, we're using it, I don't know how you use it, 50% a bit like Trello, 50% like Asana. With Asana, it likes lists, doesn't it?
Yeah.
And so we kind of have categorized each list, one saying this is to do, this is in process, this is on hold, and this is complete. And then we can kind of drag them around and things like that as well, which is really nice because you can always go back to something you think you've completed, and then you can look at all the descriptions and all the information related to it.
Yeah.
I think that's really helpful with Asana as well.
And putting it in progress as well, it gets it off the to-do list because you've actioned it and you've started it, and it might not be, the ball might not be in your court anymore, but it's not staring you in the face as an item on your to-do list, making you think you've still got lots to do.
Yeah. No, I mean, I think it's really good. I think it's better, clearly more powerful for when you've actually got sort of a team of people that are sort of all using it together, right? But I suppose in a way you two are a team, like you presumably have tasks that you have to decide who's going to do that. Like what's your sort of split on things between the two of you?
We started off exactly like that, where we literally would be like, oh, I've done this, and one would say we've done this, and the other one would say, oh, I've just done it as well, and we were literally stepping on each other's toes, doing the same things twice. So yeah, we had to really break it down. There's some clear things, like I do all the numbers and all the financing and things like that. I do most of the drawing work for the projects, but then Mary does most of the actual finishes and interior design type creative stuff.
And I do all of the graphical related stuff, so the actual Instagram posts and website, all that kind of stuff. Yeah, I do.
I'm doing all the deal finding. So we do have some clear roles, but then there's just some things where it's just like, this needs doing, which one of us is doing it?
Yeah.
It falls into the middle.
The thing is, there are some things that are really fun in this job or this industry you both want to do, and then there are some things which are not fun, and you need to decide who's going to do it, right?
Yeah. So about a month, so I think about a month into setting up the company, so it was quite early on, we realized that we were stepping on each other's toes, and we sat down with just a roll of paper, and we said, okay, what do you like? These are all the tasks that are related to kind of overhead umbrella tasks that are related to the company. What do you want to do, and what do I want to do? And we broke that down really clearly to what we wanted to do, and then we just kind of from then on, and it's kind of been 18 months from then on, we've stuck to it, and it's worked out really, really well as soon as we sat down and did that. And now, because we've had about 6 months ago, we got a VA as well, and moved on kind of the data scraping, the kind of time consuming tasks that neither of us wanted to do. And our VA loves it. He doesn't want to do anything else.
Yeah.
We give him anything creative, he's like, no.
That's perfect. That's perfect.
Yeah.
So look, we've got some questions that were sent in by people off of Instagram. Before we get on to that, just wanted to quickly touch on social media. So you've mentioned it already, you know, you're pretty active. I see you on Instagram. Do you do other social media platforms?
Everything on Instagram goes through to Facebook, but it's not really, it's
the automated.
It's the actual, Instagram's our most used platform that we do, and then we kind of funnel things out of Instagram to other platforms.
Okay.
We're hoping to get onto other platforms like LinkedIn, and we're just kind of working through how that works and what that means, because it's a whole ball.
LinkedIn's funny. Whenever I talk to people about this, everyone's always like, I want to do more on LinkedIn, but no one is doing it yet.
I know.
It's quite overwhelming. I think the nice thing about Instagram is it's quite sort of clean and limited, right? Like, it's not overwhelming because it's just the feed and it's designed for mobile, so it can't be too overwhelming. Whereas Facebook and LinkedIn are sort of these vast, you know, notifications popping off in every corner of the screen, all that kind of stuff. And I suppose the question then is sort of why, you know, why have you put so much effort into Instagram, and you know, what have you got out of it today, and what are you hoping to get out of it as you continue to sort of, you know, build your brand, build awareness, build engagement, etc.
I think we chose Instagram because of exactly what you just said. We both liked Instagram more than Facebook in the outset anyway, from personal use, and it's just clean cut. It's more about the imagery and the inspiration from the imagery, as opposed to people ranting and raving on and giving out their opinions, which I find on Facebook.
Yeah.
And then in terms of what we've got out of it, I mean, the main thing is just the network and the connections we've made on a peer-to-peer level. But yeah, we've had investment inquiries come through it, all sorts of stuff. It's well worth putting the effort into.
Absolutely. Just to find, like you're saying, with the network, isn't it? It's so great to kind of build a network of people who help each other, support each other, and we're all going in the same direction, kind of to be able to share the knowledge and the experience. And like you say, Instagram's so easy to pick up and use and communicate with other people. It's so user friendly that we're really able to do that. And off the back of that, just, you know, if interested parties as well is really good for people's business.
No, I agree. I think that you know, there's a bit of a there are some people who clearly were using it to try to raise money, and, you know, primarily for that sort of, you know, finding investors side of things, which I think that, you know, you can certainly make the mistake of kind of making it too much all about that, right? And I think if, you know, you do the way I think about it anyway, it sounds pretty similar to you, is, you know, first and foremost, it's networking amongst your peers, rather than going to, I mean, you can also do this, you know, going to, you know, PPN and PIN meetings. You know, you can do that stuff on your phone, right? Which is great. And so, you know, it's kind of support, it's inspiration, it's education, it's all those kind of things. And then if it does also lead to, you know, some investors at some point, then that's kind of, you know, a bonus, to be honest. It's I did a post today because I did my first post a year ago today. So I was just saying to people, like, you know, before that, for probably like 6 to 9 months, I was just following other people and not posting. And so what I found was that, like, once you start sharing, you get a huge amount back from that as well. Like, you can't really kind of get into the community, I don't think, if you're not sharing yourself. Does that make sense?
Sure. Yeah, I think so. And as well, if you, very similar to what you're saying, I suppose, if you use it just as a sales platform and you don't give enough, I don't know what the longevity of that is. If you're kind of just selling rather than helping people, you know, how long are people cool to do that. I suppose you just have to really prove yourself.
Yeah. Well, the trouble is, if you're just selling, then you're going to run out of different things to talk about, aren't you? Like, it's just very sort of one track, and it just gets pretty dull if it's just another kind of, another GIF with a pound sign in the middle of it. Like,
percentage, boom, boom.
That's pretty boring. Cool. So let's do some questions now. You got one about COVID, or what's the post-COVID world looking like? So, just remind me of sort of what the specific question was that you got on that one.
Yeah, we were asked about, so obviously starting today, things should be easing in the property market, and viewings, etc., should be allowed to start taking place, obviously social distancing, and just how HMOs fit into that, because it's an easy concept to think of when you're just doing an empty buy-to-let house, but how does it work viewing a room where there's already existing tenants, and whether or not there's HMOs are included in it or exempt from it.
Yeah, and there hasn't been any specific guidance on that. And to be honest, by the time people see this, there might be more specific guidance. But the way that we've approached it is to it's a difficult one, because you've got to manage on the one hand the people that already live there, but then you've also got the person who needs to move, and they need to find somewhere to live as well. So we've just kind of approached the existing housemates and asked them if they're okay with a viewing and potentially with someone moving in, and if they are, then we'll do it, and if they're not, then we wouldn't. But I think that as the existing house, in the last few weeks it's been slightly different, because the people that live in that house, a lot of them have been working at home and have been effectively in isolation, like a lot of us have, and only going out for the bare minimum of things. As more of those people start to go back to work and are more interacting in the world, I think that they will probably start to feel less sensitive about having another person in the house, because if they're going back to their place of work and they're interacting with people, by all means they're keeping their 2 meters, which might not be feasible, but let's say they are. And they're also taking public transport, let's say, because certainly in a city they probably are, it's probably the way they're going to get to work. Then if they're interacting with all of these people, it probably is going to feel like one more person in the house isn't a huge risk. But I think it's going to be, you've got to look after the people that you've got to look after your existing customers first before you start thinking about bringing in extra customers. Is kind of the way that we've looked at it.
I don't think your approach should change much from how it's been. If you've been taking the right approach in the past, since COVID's happened, in terms of like speaking to your tenants about any potential rent reductions or rent holidays and things like that, it should just be the same approach, really, exactly like you said. It's a two-way relationship. If you're going to say to them, right, it's opened up now, so we're going to start putting people in whether you like it or not, then you're probably not going to end up with great relationships with your existing tenants anyway. So it's like you said, just be compassionate, show some discretion, assess the situation as you need to. If a household doesn't want someone moving in, then don't try and force it on them.
And I think that's probably is kind of the crux of it, right? Like, the question was kind of asking, what's the law or what's the guidance and all that kind of stuff. But actually the answer is what's best for your business. And the best thing for your business is to look after your existing customers, because it's all fine forcing a new person on them. But if you've got the one happy person over here who's been allowed to move in, and then 5 people who are pissed off over it, how's that good for your business? So I think it's sometimes doing the right thing and also doing the best thing for your business is the same thing. So I think that's probably the case with this one. So I got a few questions. S3 Capital was asking, how do you finance your first HMO conversion? So converting a house to an HMO, what sort of financing or mortgages do you look for? So I think the first thing would be speak to a broker, but in the absence of a broker, we haven't got a broker on this call, so we'll have to try and do it. What are your guys' thoughts on that one?
Definitely speak to a broker, find out what you can't lend, how much you can lend, whether or not you can get alternative finances that will cover any of the refurb costs or bridging products or anything like that.
I think what we found out, what was interesting for our first HMO was speaking to a broker is really important, because you very quickly find out if you can actually have a HMO or not. Because we didn't have our own property, or we didn't have rental experience, nobody would lend for us. So HMO regulations in terms of lending, the lenders for HMO, they don't lend to you unless you've got HMO, not HMO, sorry, rental experience.
Buy to let, basically, yeah.
That's right, buy to let experience. So things, just background, things like that is really important to understand first of all before you move forward, because what we had to do is we really wanted to purchase, and we wanted HMOs. We didn't want buy-to-lets. so we were really, we were determined, if there's a will, there's a way. So we JV'd with, she's a silent partner with somebody who has experience in lettings. So we were able to do that, purchase the first property to turn into a HMO. So I think that's first things first, definitely talk to a broker to understand what your opportunities are.
Yeah.
And then in terms of actual then raising, because obviously you're not going to get 100% funding for everything. So raising the actual money you need yourself for the deposit or whatnot. We had a really interesting chat when we met up in London, Roland, about how raising finance becomes easier once you've got a product. You've got an example to show, like, this is exactly what I did, and this was what the returns were, etc. And so it is a lot harder to get the finance for the first one. Obviously, you can go to friends and family to start with, and people who have got a personal relationship with you. If you can find a JV partner. Otherwise, if you can stretch yourself to get the funds yourself to do the first one, in order to get that exemplar kind of example product, it's a good thing to do.
Yeah, I mean, just to sort of like flesh out a bit of what Andrew was saying there about, when we spoke about this before. So, for my first project, I took out a bridge loan to purchase the property, 70% of the purchase price. And then I myself funded the 30% deposit, plus the stamp duty, plus the refurb, which is obviously quite a lot in total. And if I carried on doing that for every project, then I'd have to go much more slowly, because, my pot of cash would only allow basically one at a time, probably. Yeah. But having done one like that and being able to show lenders and investors, which are basically the same thing, they're both people that are going to lend you money, what the finished product looked like, but more importantly what the kind of financial returns and ability to repay debt looks like from the remortgage, that then opens up other things. So for example, like you said, a development finance type product where you can also, on top of the 70% of the purchase, you can also borrow up to 100% of the refurb, or from a lender, or going to private investors, whether that's friends, family, other people that you've met in your network, who would be willing to to provide debt on similar terms to a bridge lender, basically. But yeah, I think that the question specifically refers to your first one, and as you said, it's difficult to get much more than 70% of the purchase price for your first deal until you've got a track record. And then, as you said, Mary, making sure that you're eligible. I mean, eligible for the purchase finance, but then also, almost more importantly, you're going to be eligible for the refi, because you could like stretch yourself to do all of the works, but then if you're not going to be eligible for an HMO product, then it's going to be quite stuck. So yeah, definitely speak to a good broker, maybe speak to a couple of brokers, so you get sort of the full picture on that one. Cool. So what was the other one? Let's do one more. So Kaza GM asked, do you consider being highly leveraged a risk? And if so, what is your plan in the next 5 to 10 years? So I think with coronavirus and potentially a bit of softness in the house prices, a lot of people are more focused on leverage than perhaps they were a few months ago. What's your thoughts on leverage? Obviously, we're both in that sort of growth phase where, you know, you do want to pull out as much money as possible and reinvest and all that kind of stuff. But how do you kind of think about that?
Yeah, exactly what you said. We're in the growth stage, so I'm happy to be leveraged at the minute. There is still ways that you can protect yourself through that, though. You could just, if you stick to just bricks and mortar valuations, obviously that will, as opposed to commercial valuations, yes, you're not going to pull out as much money, but you're going to have less risk of the product, you know, your property eventually potentially not being worth what you've mortgaged it for. But yeah, we're in the growth stage at the minute, so we're happy to be leveraged. We want to pull the money out, we want to reinvest it. But yeah, in 5 years' time, that will probably become a strategy for us where we start paying down the mortgages or lowering the loan to values on the properties in order to build in that buffer.
Yeah.
When we're not needing to grow as quickly.
Yeah, I think sort of, although we are, you know, we're leveraging ourselves, we do keep a very, very close eye on our finances. So, I mean, at the moment, every few days you review our finances, don't you? And normally, like once a month, you would review our finances. So we know that when there isn't a point in time where we're in trouble. So we have a, you can explain it better. Is it a 12-month outlook?
Yeah, we have a 12-month cash flow forecast that I review every first of every month, give or take a few days. And yeah, we know when the pinch points are coming. We know that if we put this deal into it, and you know it's going to be roughly this much being spent, etc. That will cause us cash flow problems in August, for example. You know, we know when the pinch points are coming and whether or not it's going to be feasible, or we'd have to go a bit slower, or we'd have to start the project later.
Yeah.
So we are well ahead of the game in terms of then.
Yeah. So we find ourselves a route out before the pinch point. So we're well ahead of that kind of understanding when we might have a pinch point, when we might be in trouble.
Yeah.
Another thing to say, kind of thing, is if somebody is quite early on in their kind of property investment phase, is to if you're not getting enough passive income from your properties, or you don't have any passive income yet off your properties, it is a, you know, it maybe don't dive in and lose your job. And it's not a bad idea to keep your job, especially for getting mortgages and things like that. We both have jobs. And you know, kind of when we do think about, oh, we might have a pinch point, or at some point we might get in trouble, we might be highly leveraged, there might be a huge recession, we can always think, actually, we're both skilled, we both have jobs, and if everything goes to pot, we can still support ourselves and have a roof over our head. So just don't leverage yourself so extremely that you're relying everything on one thing. So don't put all your eggs in one basket.
Yeah, no, I agree with all that. I think the other things I would add on, I mean, the thing that people really worry about, you know, with leverage is, you know, they're going to get to the end of a mortgage, you know, the fixed term deal on their mortgage, and when they come to refinance, that it's going to be, you know, it's going to be a lower number, and then they're going to have to put cash into it, which they might not have. So I suppose the two ways of trying to protecting yourself on that a bit are, A, you know, lock in your interest rate for as long as you can. So, you know, even though the 5-year fix is going to have a higher interest rate than the 2-year fix, it's probably not about, particularly with, you know, with us being, you know, quite early on and we're knowing that we're going to want to reinvest, it's probably a good idea to go for a longer fix on those things. And then the other one is, having as you say, Mary, like whether that's, you know, having income from a job or just having savings, you know, a bit of a fund set aside that you're not putting absolutely everything into your property investing. And that could be invested in, you know, that could be cash in the bank, or it could be in something like shares, something that's, you know, highly liquid. But the problem with property is, you know, it's not highly liquid. And if you want a highly liquid solution, like, you know, We Buy Any Home, then you're not going to get a good price for it. So, So yeah, I mean, I think on the level at which you refinance, you know, bricks and mortar versus commercial. So I do commercial end values, which, you know, in a way, as you say, Andrew, it is taking on a bit more risk. I mean, the way that I look at it is that, to be honest, if you've kind of converted the house extensively and you've got en suites and all that kind of stuff, it's going to be bought by an investor regardless. Like, you know, it's not very likely that a family is going to come along and buy a house with 6 en suites and spend all the money to convert it back. And if they do buy it, they're going to reduce the price for all that work they've got to do. So the way I look at it is that, you know, it's these things are going to get bought by, if you have to sell it or you want to sell it, it's going to get bought by an investor, and it's probably going to get sold through an auction, because that's the way that you address the investor market. So, you know, I think the best way to know sort of the way that I look at, you know, what I think that these properties are really worth is to look at, you know, what are people paying in auctions for HMOs in the area, and what yields are they paying for that. But
the size of stuff you do, where 8 beds, and you're right about the amount of work you've done. I don't think you can go for a bricks and mortar valuation on that. It's just one stack. But I think it's the people who, you know, you might have done a 6 bed, and it's kind of on that cusp between a commercial valuation and a bricks and mortar. And yeah, no, if you are really worried about leverage, maybe over leveraging yourself, just maybe consider, you know, if it's 50k difference between the commercial valuation and the bricks and mortars valuation, you know, is it worth the extra risk? You know, I don't know. That's what I suppose what I'm saying. Definitely for you, your 8 beds, you know, commercial all along. Commercial valuation all along.
Cool. Right, so that's been fun. Is there anything else that you wanted to chat about, or where can people? Well, we talked about Instagram at Elite Investor Group. Yeah, is that to find you?
At Elite Investor Group across the board, so on any platform really. EliteInvestorGroup.com for the website. So yeah, just come and check it out and say hi.
And when people communicate with you on Instagram, who are they actually communicating with? Who is it?
They're talking to me, which most people can't believe. Yeah, they're talking to me.
Yeah, 90% of the time they're talking to Andrew, and then sometimes I take over without realizing. And if you get really sweet messages, that's wrong.
I don't know what that's meant to say about my messages, but okay. No, every so often I'll go on and loads of people have sent me messages or liked my comment, and I'm like, I haven't written this comment. It's just,
oh yeah. Sort of sweet and soppy about how much they love everybody.
Yeah, I take over sometimes.
Cool. Guys, thanks very much. It's been a lot of fun. Enjoy the rest of your day.
Thank you so much. Lovely to have us on. Thank you.